Good morning, everybody, and this is your Dow Jones day trade setup for today. So yesterday gave you a range that you were looking for a retest. We got the retest, and guys, it's important. I do not trade just the break. I trade the retest. So if there's no retest, there's no trade. So you're asking me a silly question in the comments, you're going to get a silly answer, and that's really to protect you because I've been there before. Jumped in on many things and lost my shirt on many things. So there's a clear structure, there's a clear strategy, and we stick to the strategy, we stick to the rules, we don't deviate from it, and we don't guess. Okay, so first things first, if we just start off on the monthly, really messy chart, but we've got a really strong engulfing bar here that closed on the swing low of the previous month. So nothing that's really there. We do have some monthly support a little bit down at 29562 and a little bit lower. Just going to put that in over there. And we'll look at those levels on the lower time frames. So that was the end of the month. We've got the end of the week today being Friday. We've got manufacturing PMI data coming out. And this zone up here, kind of just above where price is, what we've been flirting with yesterday, that is the 155 EMA, and look at the crossover starting to happen. So the weekly is starting to look very bearish. It's starting to change from a uptrend through last year, and it's now starting to look very bearish. As soon as we get that crossover and we get a retest of this 155 EMA area, it's going to be bearish in my view. So let's get down. Let's get down to the 8-hour trend is down. We know that. We're looking for retest of structure. There was a range bar here, which I'll get to now. That was a level I gave, those levels I gave you yesterday. More importantly, we've broken the wedge, and we've had a 1-bar retest of that wedge. There were buyers up here, buyers down here, and there were sellers up here. Oscillator's not giving us any indication just yet, except that we should be looking to sell. There was a range bar we were looking at yesterday. We came back into this area, we rejected. That was your opportunity to short. So the opportunity short wasn't at the opening of the day, it was over here. And if we just drop back down to the hour, this is where everything is clear. There was your range. We got the break during the video. It fell quite far, but that's not your entry. There is your entry there. And look at the 155, how that plays in, comes into play as well. And you can see there's a bit of structure there, and there was a gap there. So anything from 39.24 through to 31.04 was your retest of the break. So it was the range break, and it was also the wedge break. So that was your entry. We've had a pretty strong move to the downside. What you're looking for now is retest of structure. Could swing as high as this again. So, and that's purely because we didn't quite respect it. We were above it onto the 155 EMA. So you could get a squirt up to 39.24. Lots of data today around manufacturing PMI around the globe. So that is a distinct possibility. And this is the next area where you're looking to short off. That is 37.53. So we want price to come back up, reject an area, and then we look for the move to the downside. It is extremely volatile, guys. It's, you can see how far we move from the moving averages and how quickly we move from the moving averages. So you need to wait for those retests. Do not just jump in. I can't explain to you how much money I've lost by just guessing and assuming that it's going to do something, and then panicking when I realize that I was wrong, losing my money, and then it does move in the direction that we were expecting it to, but by then it's too late and the damage is done. Okay, so that is the view that we've got. If you look at the 15 minutes as well, 155 here, right in an area of potential resistance, and it played out pretty well. So you could have taken this first one or even the second one. So this would be the first one, leave it there. So it's a 170 odd point stop loss. I'd actually would have put it a little bit higher. Just call it a 200 point stop loss. The minute you got the second one, then you could have added to your position and then tightened the stop to just above these, this like kind of tweezer top type thing here. And that would have given you a move, let's say, well, that would have been, call it 150 point stop loss for a 200 point gain coming straight back into this area of structure here. So that's kind of my view at the moment. I think it's going to be messy this morning. It's going to be quite volatile, so keep your wits about you. Wait for the retest of structure, and then you're looking to short it again. So any one of these two levels is what you could end up with. So pay attention. It's going to be volatile, that's for sure. End of week, start of a July the 4th weekend. So lots of traders probably going to take a long weekend, go on holiday. So you probably find the afternoon session be really quiet, but the morning session be really busy. So this is kind of the structure that we're looking at. Anyway, hope that helps, and we'll catch up with you on Monday morning. Cheers for now.